Hello YouTube and hello Trade Pro Academy. Welcome back to our YouTube channel, and in today's video what I'm going to be doing is sharing some tips and tricks to help you understand how you can hold large movers and larger gains in the market. One of the best skill sets that I might have in the market is actually holding massive winners. I'll explain exactly what I do and how I break those down. Now, you've probably heard this before, but someone might have told you, someone might have given you advice, or you might have heard on podcasts or whatnot, people saying you want to hold on to your winners and cut your losers as quickly as you can, right? That trading advice, that classic trading advice. But obviously, right, no shit, I want to hold my winners and cut my losers as quickly as possible. But the question is, how can you do that? How can I let my winners run for such a long period of time, right? So I'm going to be breaking down just that in the futures market and how I generally like to hold my large potential movers on the ES or the NASDAQ futures. And, right, realistically, this theory can be applied for any intraday movement on a day-to-day basis. So what we'll need for this is I'm going to be breaking down a little more of the volume profile, delta, and even we can use a footprint overall to help us understand how we can actually hold these larger moves and these larger trades. So with that being said, let's dive right into this. Let's look at the screen here and break down what these trades is actually going on as I'm recording this, as a very good example of how to hold it, where to put the stops, and how to trail this for max potential gains. So let's dive into it right after this intro, and I'll see you guys on the other side. Right, so we're back on the screens here. I'm going to be breaking down this trade, right? I took a little loss on the S&P 500 futures a little long earlier on, and now I'm trying to hold out the remainder piece of this short, just smaller size on micros. It's been a choppier day. It's a very low volume day, so scaled down a decent bit before Jerome Powell comes out, right? And this is filmed on September 25th, so Jerome Powell pre-market on the 26th. And PC, meaning baby size until then. Now, first thing I do want to say is that in a trade that's going your way, right, it's really dependent on the size that you trade, right? This is the number one thing that we need to know when we're talking about this video. When I'm looking to trail massive positions, the first thing that you need to understand is sizing, right? Is really, really dependent on that. Personally, now, listen, I could be wrong, but the idea of holding one or two contracts for this massive turbulent move that you're expecting 60 points on the S&P, or you're expecting like 200 points on the NASDAQ, it seems like a very hard task, right? If that's your originating position is what I mean. Now, trailing one or two after you size down, that's a whole different story. But if I'm talking about if you're getting into a position, if your normal trading size is 1 to 2 lots, and you're just like, let's swing this to the fences, let's see how this goes, I'm telling you right now, it is a little more difficult because the profits are staring at you right in the face. If you have 10, 15 points on the S&P on like 2 lots that are running, you're looking at it, it's a decent amount of change, right? 10 to 15 points per lot. You're looking at about $1,000 to $1,500. You don't want to let that go. So it's a very hard aspect in that sense to trail very small size. The first thing that we should understand is sizing to be able to hold these monster moves. So sizing for me allows me to actually trail properly. I would say a minimum threshold if I'm looking for a larger move, right? If maybe everything lines up, every single perfect aspect of the setup lines up, and I'm like, you know what, this thing could run, maybe it turns into a swing. Realistically, I'm at least holding 4 contracts on any type of market, right? If I'm trading the minis, if I'm trying to trail this, if I have large expectations, at least 4 contracts. So I would ideally like to do more. So if I'm trading micros, for example, here, right, maybe like 15, 20 plus contracts, it's a lot easier to hold them and cut them at the same time when the time comes. So if I'm usually trading 4 to 6 minis, if I do minis, right, I have still that malleability, but it's at the lower band threshold realistically. I think once you start entering the sphere of 3 plus contracts in the futures market, it becomes a lot less aggravating or I guess worrisome to try to trail maybe one of them. So theoretically, right, I'm not the type of person that trails the whole position. This is why I'm talking about sizing. I'm not just like looking at it and trying to estimate like where I should get out based on what's going on, right? Because theoretically, if I'm still following the movement and the trend, as we'll explain later on this video, there still could be a lot of potential movement on the actual trade itself. So let's say I'm trading like 4 to 6 minis, generally I'd probably cut half of them and try to trail half of them. If I'm trying to trail, let's say like 15, 20 micros, right? I think I had about like 15 on this. Well, realistically, I'll cut most of them or half of them out at the first threshold and then see if I can trail the rest of them. So this allows me to take profits on these larger positions and be okay with the outcome realistically. Like, since I want to manage my risk to reward on a trade by trade basis, I want to make sure that I'm able to actually cut profits when I have them and still have that malleability to trail or try to look for a larger extended move. So what I mean is, let's say I'm trailing one lot and it goes like 10 to 15 points on the ES in my direction, and I don't take anything off. It comes back to break even, and the next trade I take a full stop, right? I'm not going anywhere on the equity curve if I do that, right? In essence, I'm going to be down on the day if that happens. I did take profit on the first one. The second one fully gets stopped out. I'm left trying to look for another trade, trying to come back when I could have been done, right? So even if I'm trading larger size, let's say like 6 lots, right? For me, that's on the cusp of being like, I'm fine with that. So I'll take 3 of them off at like a 2-to-1 ratio. So I've already covered even the potential next loser. So like if I use a 3-point stop and I take 6 points, right? I'm fine. I'm fine there. I can trail the other half per lot. So that's 18 points total. I can freely trail the rest of that size. Or even if I take 4 of those 6 off at a 2-to-1, I'm still ahead theoretically. So one of the next things that we do have to understand, now that we've got a little more basis on how I view sizing and how I like to size so I can be able to trail, right? If I'm not that confident in a position, number one, I'm not expecting a big move to happen. And number two, I'm not going to size largely on that trade, right? If it's like, it looks okay, it looks good enough to take, but I don't really expect too much, I'm going to treat it as a small position with a small potential move on it. So the next thing to mainly understand when it comes to actually holding out these larger moves is the general context of the market. So you got to ask yourself, right? Is the directional move or trend actually presenting the opportunity to hold this monster of a move or this potential monster of a move, right? That's more dependent on what I look at in terms of auction theory, auctions, and order flow. So I'll break those things down in essence, and we'll look at some of those examples. But like overall, these, like everyone has a different trading strategy. Everyone trades differently. But I'm sharing generally how I view the markets and how I try to trail these massive moves. So if you're trading futures, this might apply to you more. But if you don't trade like with volume profiles in auction, I think this could open your eyes to some new ideas here. So first and foremost, I have to understand what's going on in terms of balances. So if I open up our trusty profile over here, and we'll take a look at how that shapes up realistically on the actual chart with those trades on. But if I take a look at the overall profile, and I'm trying to understand what the overall context looks like, right? I want to understand where my auctions are and where like my minor areas within those auctions are. So for example, if I'm looking at what's going on right now, we're technically in a bullish auction, right? When we're coming into these highs right now, into these like all-time highs, what we're seeing is like a few little failures. So that's why I'm looking at this. I'm like, you know what? I can potentially look to swing or try to throw a little short into this to look for some kind of downside momentum. So the key aspect here, right, for me, what I'm looking at is this like overarching like massive distribution that we have. So if we like block this whole thing off, the top and the bottom of this auction right now, this is the huge balance that I'm playing with. So realistically, like if I have some kind of idea to short these highs, right, when I'm trying to trail or I'm trying to hold this position out, if we start breaking towards the top band of that auction and start moving into this heavy volume, I can expect a larger move realistically. But if I'm trading against this, like when we actually accept lower and I start trading against it, I can look for the larger expected move once we start breaking some of these key areas over here. For example, we start losing that 82, 83, we start losing this like 70 and so far, like and so on realistically. So we can play leapfrog with these levels. And that's one of the main ways that I know that I can hold this position out. Because when you move into a large balance like this from the highs where we had like imbalance, if we move back within this balance, what happens is the sell pressure gets very, very heavy, right? To be able to move into such a thick area of volume. So when I look at this and we keep accepting into these like little minor divots and these little minor volume drop-offs, I don't I don't necessarily have any fears about holding this because what's happening is that there's just continued bearish acceptance within this larger auction. So from a contextual standpoint, right, this is one of the main things that I look at. Can I expect a larger move if we're moving into a new balance or outside of a balance, right? Whatever the case may be. Like, for example, this massive overnight move, if we start moving outside of this larger balance, right, and let's say I'm long somewhere from below, realistically, when we start moving through both of these levels, there's a huge expectation that you have for the next move towards that 57.45. You move above this 57, like 15.10 area on the S&P, right? My target is about 30 plus points away. If you accept above that, it's another like 30, 40 points away. So if I understand where I am contextually and if we're continuously moving through these balances, then I can realistically still hold this position out. Like, for example, if I'm looking at the S&P, top end of the balance finds itself somewhere into this like mid to high 80, 57, 85-ish, right? 57, mid 80s. So let's say I'm short from above for whatever reason, right? Let's say I see some like large selling, whatever the case may be. Now, initially, I'm a little concerned about this because we have a huge balance top at like 84, 83. I have maybe like 6, 7 points of leeway before I get into there. So that means that I want to take the majority of my position off. Now, if we actually accept into this balance and start moving inside of this balance, I'm a lot more calm about me holding this position out because it gets very bearish once we have that kind of acceptance. It's a very similar case when we start moving into this balance from the downside. When we start accepting into the balance from the downside higher, right, and I'm trying to get along, well, that's fantastic. I have a lot of leeway. I can look for the other side of that balance, which is the same thing in this case. I can look at the other side of this balance as a major target, but baby steps, right? Once we start moving through these like key areas where we have volume drop-offs, right, that allows me to understand that, okay, there's fluidity, there's momentum in this, and I can hold this out. I generally use these areas as like guideposts, right? So if we move through a guidepost, like for example, here on the S&P by like 5, 6 points, and we continuously drop under it, well, fantastic, right? I can hold this position out with the expectation that there's more downside momentum in this trade, right? Now, if we keep moving and keep moving, there's no real reason for me to just completely get out of this trade. Now, I can take bits and pieces, and this is where sizing comes into play. Because if I'm looking at this and it drops off and it starts whipping around 10, 15 points, it's still like, let's say 6, 7, 10 points in my direction. But if it starts whipping around like 15, 10 points of volatile moves as it's in my direction and it's green, I get a little worried about that, right? If I only have, let's say, those 2 lots out of that whole position, I don't want to hold it. I want to get out. But if I have multiple lots, I've already gotten out of most of them. Now, whatever happens, happens realistically, and maybe we can go even further down. So the second aspect, right? The second aspect that I use to identify how I can trail this, right, or what the potential of the move looks like is delta. This is one of the key factors, right? So one of the key factors that I look at when expecting a large move to shape up or not. For example, with this short idea, right? I was looking for this short idea, maybe a little late, right? But if I look at the DOM over here and we look at delta, you can see the accumulation of people that are trapped into highs, for example, right? You see the accumulation of heavy delta areas over here, right? On the S&P, generally, heavy delta is like 1,000 plus. So let's take a look at this delta chart to see if we can find any imbalances that make a little more sense. So if I'm looking at this, realistically, we have a lot of heavy positive delta into the high. They get trapped, they start selling, and they start moving lower, and they start trying to accept into lower areas. So when I'm looking at this, right, and I'm taking my short position, I know that these guys are really, really trapped into the highs, meaning that there is most likely going to be an expected larger move. When people get that absorbed into highs or into lows, you generally see a larger move happen in these markets, right? So for example, we had this multiple sessions before where massive people got trapped into the highs, and you did see a 20, 30 point decline in price. So that's my originating thought over there. And also, you can see these clusters of negative deltas that stick out. So again, if I'm using guideposts, as long as we keep moving below those areas, that's telling me that these net sell imbalances are actually being activated for the continued sell. So when I look at this, I'm just looking at if we can cross over. If we can continuously cross over these large barriers of imbalances, in this case, delta, right? That allows me to understand that, okay, there's most likely going to be a potential large move. Because again, if you accumulate that much negative delta into a low, people are most likely trapped on the short side and you start to see a reversal. However, if they continuously flow negative delta as prices drop lower and lower, you're most likely going to get that kind of expansion, that continuation that'll allow you to actually hold on to this larger position. And finally, the DOM. When I look at the activity on the DOM, right, I can get a better understanding of how things are shaping up. If I see a DOM that's constantly going in my direction, for example, if I'm looking at this DOM, I'm looking at the market sell and the market buy side, right? And I'm also comparing it to the delta that we have, because look at this. At the tops here, we have a lot of positive delta that gets trapped, realistically, right? All that positive delta that gets trapped into that high. What happens is that the reversal opens up where people are actually selling against those guys. And then we have, again, more clusters of very heavy delta. So earlier on in the session, you had this like 1600 positive delta at 90 that was holding support, but failing to make new highs, right? They kept rotating and trying to sell against them. And eventually we break down this large cluster of delta. So if I'm looking at the DOM and they're constantly going offer aggressively with larger size on every buyer that comes in, I know that the directionality is most likely to the downside, especially once we start losing all these imbalances that were created, right? If they start losing them and selling aggressively against them, that's great. That's great news, because now I know that there is a large potential move. The more you create an imbalance into an area and it doesn't really go in the direction of the imbalance that's created, the higher probability you have a very thick move ahead of you, a very large move that can shape up. So that's exactly what I'm looking at right now. So when we have those like general three criteria, right, from an order flow standpoint, from an auction standpoint, maybe from a balance standpoint, to help me understand that, first of all, there could be a large move, right? I'm also using these tools to allow me to hold the position. Because again, if we keep accepting to the downside in terms of these auctions or this delta, whatever the case may be, if we keep moving through those barriers, I can still hold my position, right? But I'm only doing so after I've been able to take some profit, so I can be a little more calm, a little more free to kind of let this thing play out as it wants. I don't like to personally try to hold the whole position for this massive gain. I don't like when it goes against me. I don't like when we get these whips, because you can see, okay, price is slow. It kind of chops throughout this, like on this chart. It kind of chops, but it's slowly going down. And then it drops, right? Great drop, fantastic. This is what I want to see. But then it whips back up. I don't like that. I don't like to be against that, even though it's still not defying any of the criteria that I'm trying to look at, right? And I'll explain very soon, like delta, for example. You see the delta clusters over here. This is why my stops are above these levels. Huge clusters of delta over here that were created before we got that drop. So as long as we can remain below that, I still like the potential for this to drop. So yeah, okay, we're still maintaining below that, so I don't have to worry too much, but I still want to make sure that I've taken chunks off so I can freely just analyze this without thinking too much about, okay, I had this much profit, now I only have this much, like what am I going to do? So the next aspect, right, let's talk stops. What kind of stops, trailing stops, when to trail them, all that stuff when you're looking at these large moves. One of the biggest issues is that people, when they see profit, when they see these like larger moves, they trail their stop too tightly, or they just like flatten and get out of the position. When you just choke the stop and you choke the trade, you put the stop right next to the actual price or very close to it, because you don't want to give up any of those gains. You're not really doing yourself a favor. You might as well just get out of the position, right? So the big question is, what kind of stops and when to move? Again, if I'm looking to trail larger movers, I'll still use a consistent stop. Like for example, on the S&P, about 3 points, on the NASDAQ, about 20, 15 points. And I'm just going to keep those as is. Now, I'm only going to move stops in my direction if, number one, I've been able to take my first profits, right? Meaning like 2 to 3 times my risk. So 2 to 1, 3 to 1, something like that. Generally a 2 to 1. If I'm able to take a large chunk of that off, right, meaning to take that large profit off, then I can start considering, okay, can I trail this? Where am I going to trail it? Generally, once that happens, I'll probably put stops to break even, so I don't have to kind of deal with that anymore. Now, the second aspect is, if we're actually making some kind of structural shift in my direction, is structure continuing in my direction? Now, This comes from the idea of the acceptance of a balance, right? Or clearing some very heavy delta areas. So even from a price action perspective, let's say we're working with this short. If we're going lower lows, lower highs, lower lows, lower highs, realistically, I can hide behind those lower lows and lower highs. But again, right, I don't want to be too tight on that, because let's say if I hid behind this lower high over here, I would have gotten taken out on this pump. But my idea of where the top of the balance is, as well as all this delta imbalance, is still keeping me in this position, albeit we don't really have too much size left, but it's still keeping me in this position. So maybe I'm wrong to not take it off right now, since we can't necessarily break lower, but it's one of the concepts that's keeping me into these potential larger movers. So if I can break down those two concepts, remember, if I've taken the first profit off, right, and we're starting to continue in the direction from my balances or clearing some imbalanced deltas, then I can start looking to move my stop, right? It's going to be dependent on that. Now, trailing my stop is another thing, right, that I use to try to capture these large moves. Like I said, I don't want to trail it too tight, because like, okay, these are my stops right now. If I put my stop like over here, it's very easy for prices to come back and get it, and then I kind of risk not getting that larger move. I don't want to just like trail it and scale it as it's going in my direction, right? Because you do have these whipsaws. We dropped, from example, from 57.82 all the way down to about 70. That's like 12 points. And we whip back up to 80. Another 10-point whip. So like if I'm trailing super tight, I would have been out of this position already. And maybe I wouldn't have, not that I caught that much more, right? I pretty much caught like 2-3 points extra on one of those lots. It's not the end of the world, but I'm just saying in other circumstances. So realistically right now, I'm in this short, right? I'm currently in this short, and I want to identify where my lower highs are. Like we just saw, we have some lower highs here, but they're not necessarily making lower lows. So I don't necessarily want to hide behind that. Now, one of the key aspects that we talked about, we've accepted into this auction. That's why I drew this area. Balance top and balance low. This is the general auction. We have this auction from here somewhere. So when we accept into something like that, then I can move my stops, right? I can move my stops behind that auction top. Generally, I like to give it a little leeway. Like if I have the area or a lower high in this instance, I'll give it like 2 to 3 points of leeway, and I'll put my stop behind there just in case some little wiggle room. And again, if we have a balanced top like that, right, again, same principle, 2-3 points of wiggle room on the S&P, maybe like 15-20 points on the NASDAQ, because the NASDAQ whips around a lot. The other aspect is that I want to understand where my clusters of delta is. So if I look at this, right, we can see where the delta clusters are here. There's a lot of negative delta that's helping out. You have this like massive cluster of negative delta that starts at about 86. You have this area at 89, so I'm hiding behind those 89s. But this is the general larger cluster of delta where you have a lot of negative imbalance, negative like 700, 600 stacked up here. And so far it's holding, right? It is holding. But if we start clearing back above that, it just changes everything, and that's totally fine. So when I was looking at it and we dropped down, right, we had this clustering of negative delta over here at like 75. So I hit one of my stops behind that to see if, okay, can we actually just like make a move lower from that area? Because we failed from here, and I'm like, okay, you have this massive negative delta right now. I can hide my stop a few points above that as we're dropping below this large, like nearly negative 1,000. If we're going to continue this larger trail to the downside, we shouldn't really get back up into those regions. It took it out, right? And that's totally fine. But if I'm seeing the breakdown of all of this negative delta as prices continue in my direction, that's telling me the sell side is still very strong. So I can hide behind those clusters of negative delta when I trail. Because my goal here is I want to hide behind something that's going to drastically shift momentum, where this downside trade and the downside move no longer has any business actually being a reality. I want to be able to hide my stops and get out of a position when there's a complete flip in structure. So I want to stay in as long as I can as the momentum continues, and I want to get out when things completely shake about, which means back through balance or an auction top, back through massive clusters of delta. And then I don't have to play with this anymore because I'm probably wrong anyways, and I don't want to keep shorting this thing because it has a huge potential to actually turn around and turn into a rocket. So if I get taken out of this position, I want to ask myself, am I satisfied that I extracted as much as I possibly could based on the current directionality of this balance? So if I get taken out, it is what it is, right? I've adjusted all of my thinking based on the information that I have, right? When I talk about balances, when I talk about delta areas, when I talk about even price action, I can hide my stops behind those areas. Now, I don't love to hide behind price action because it can change a little. It doesn't have to be that exact. So I want to rely on something that creates an imbalance, like massive sellers that are clustered on the delta front, so that if we continuously hold them, prices are expected to continue the trend to the downside, like in this example. So overall, right, I've given you generally 3 breakdowns of how I like to not even identify these larger winners and these larger movers, but also try to hold positions in them and try to trail in them. So again, if I'm looking at it, I really want to understand the context of the balance. If you guys aren't aware exactly what I'm talking about, you can go ahead and look at that auction video that I posted on YouTube that explains a lot of that and how I read the market based on these auctions. And, right, especially with delta and order flow. If I can find these clusters and they're accepting, this is one of my favorite tools to actually hold these larger positions and even trail prices. So if you guys enjoyed that video and you're looking forward to more, just drop a comment what else you'd like to see. Drop a like, hit that subscribe button, and try this new trailing tactic out. When you get into a trade, you don't necessarily have to be super skittish if it's like jumping around your take profit and your loss. This is how these big moves can be cut. Remember, sizing is dependent, the way that I like to do it. But if you're wondering how you can catch these big moves, try this, right? If you're continuously accepting into these like big areas based on balances and delta, then you can trail accordingly, right? The expectation is for prices to continue in that direction as long as these guys are holding through those criteria. So, hope you guys enjoyed this, and I'll see you guys in the next video.